As May 8 approaches, another key element to watch is macroeconomic data. The Federal Reserve's interest rate policy, inflation readings, and employment reports all influence consumer spending, business travel budgets, and overall investor sentiment. Aviation stocks, like most cyclical sectors, are sensitive to macroeconomic trends. If inflation appears to be cooling and the Fed signals a pause or even a cut in rates, airline and travel-related stocks could rally. A strong labor market also supports discretionary travel spending, which boosts both business and leisure travel. It's also worth considering the seasonal nature of the industry. May marks the start of peak booking season for summer travel, especially in the Northern Hemisphere. Airlines often release forward guidance and load factor expectations during this time. A strong outlook could spark rallies in the sector, especially for carriers with strong transatlantic and intercontinental routes. Conversely, any weakness in forward bookings, especially in light of competition from alternative transportation modes or rising ticket prices, can dampen enthusiasm quickly. Investors with a short-term focus should closely watch earnings reports and forward guidance being released in the days leading up to and after May 8. This is when volatility often spikes. Even minor revisions in expectations can lead to significant price movements. If you're day trading or swing trading aviation stocks, pay attention to technical indicators like RSI, MACD, and volume spikes around earnings releases. Pre-market and after-hours trading activity can also offer early signs of how the market is digesting new information. For long-term investors, however, the story goes beyond this quarter. Structural changes in the aviation industry are creating a new kind of investment landscape. Sustainability, digitization, and post-pandemic travel behavior are reshaping demand and supply dynamics. Airlines that invest in customer experiences such as improved loyalty programs, better connectivity, and enhanced safety protocols are more likely to gain market share. Delta, for example, has heavily invested in premium cabin experiences and digital services, positioning itself as a premium carrier in the U.S. On the other hand, budget carriers are seeing a renaissance. The economic pressures on middle-income travelers have led to a spike in demand for low-cost alternatives. European carriers like EasyJet and Wizz Air are aggressively expanding routes and offering price-conscious packages that appeal to travelers reeling from inflation. In emerging markets, India's Indigo Airlines and Vietnam Airlines are growing rapidly to meet increasing domestic and regional travel demand. These stocks are often overlooked by U.S. investors but offer impressive growth potential. Another key narrative leading up to May 8 is the growing focus on airline partnerships and alliances. Joint ventures and code-sharing agreements are becoming more strategic as airlines look to expand reach without additional costs. American Airlines' transatlantic partnerships with British Airways and Iberia, or Delta's ties with Air France-KLM and Virgin Atlantic, are helping optimize routes, reduce redundancy, and increase aircraft utilization. These operational efficiencies often lead to margin improvements, which are rewarded by the market. Private aviation is another segment gaining unexpected momentum. Once considered a niche market for the ultra-wealthy, private jet travel saw a major uptick during the pandemic and has retained a significant portion of that growth. Companies like NetJets, owned by Berkshire Hathaway, Wheels Up, and VistaJet are tapping into the growing demand for flexible, safe, and personalized air travel. Some of these firms are going public or merging with SPACs, offering new investment opportunities. While the valuations can be aggressive, the long-term trend suggests a shift in how business elites and high-net-worth individuals view air travel. Airports and infrastructure stocks should not be overlooked either. Publicly traded airport operators such as ANA, Spain, Flughafen One Fourth Rich, Switzerland, and Group ADP, France, have seen a resurgence in traffic and revenues. These companies not only earn from airline fees but also from passenger services like retail, food and beverage, and parking. As passenger volumes increase, non-aeronautical revenue becomes a major profit driver. Infrastructure improvement projects, including expansions and modernization, are also supported by government initiatives and private investments, particularly in Europe and Asia. From a portfolio strategy perspective, diversification within the aviation sector is key. Instead of picking a single airline or manufacturer, consider a basket approach that includes commercial airlines, cargo operators, aerospace suppliers, and innovators in the eVTOL space. ETFs such as the U.S. Global Jets ETF, JETS, offer exposure to a wide range of aviation-related companies, allowing for risk mitigation while capturing sector-wide growth. Another smart strategy ahead of May 8 is to monitor analyst upgrades and downgrades. These often precede major price movements. Keep an eye on the consensus ratings and price targets for major aviation stocks. Pay attention to changes in institutional ownership and options activity, which can hint at smart money sentiment. Geopolitics will also play a subtle but critical role. Trade tensions between the U.S. and China, for example, have implications for aircraft orders and global travel flows. Sanctions and conflict zones can impact specific airlines' routes and revenue sources. Investors should keep one eye on international news, especially regarding airspace restrictions, visa regulations, and diplomatic relationships that can affect aviation companies' operations. Lastly, it's important to remember that aviation, by nature, is a capital-intensive and highly regulated industry. Balance sheet health matters. Airlines with high debt and low cash reserves may struggle if another economic shock or fuel price surge hits. On the flip side, companies with strong liquidity, diverse revenue streams, and forward-looking management teams are likely to thrive. As we close in on May 8, the aviation sector is offering a uniquely dynamic mix of growth, recovery, risk, and innovation. Whether you're a seasoned trader or a long-term investor, the key lies in understanding the nuances of this high-flying industry. The skies may be clearing after years of turbulence, but it takes sharp analysis and a steady hand to navigate the airspace ahead. In conclusion, aviation stocks are poised at a pivotal moment. The days leading up to May 8 could be critical in setting the tone for the summer and beyond. With global travel on the rise, technological innovation reshaping the skies, and financial data soon to land, this is the moment for investors to pay close attention. Whether you're watching Boeing's production lines, tracking Delta's load factors, or speculating on the next leap in electric air taxis, the aviation market is rich with stories, movement, and momentum. Just like flying itself, investing in aviation is a mix of science, strategy, and a bit of faith in the journey ahead. Would you like me to help convert this into a script with visuals or voice-over cues for a YouTube video?